Hey, my friend Stephen Brooks here, and I teach traders who have $25,000 or more in their trading accounts how to generate a very reliable salary trading, really even as little as 5 minutes a week, plus using an AI trading bot. Now, when I say something like that, I get a lot of emails from some of our followers and subscribers who say, Stephen, there's no way you can consistently make money in just a couple minutes a week. Plus, I have no idea what your AI trading bot is. Fine. The purpose of this video is to teach you one of our way less than 5 minute a week trading strategies that is a very consistent result, very reliable result, and as you'll see here in a minute, a very smooth and consistent equity curve from the bottom left of the graph to the upper right of the graph. And again, one of the reasons why I get so much flack when it comes to saying that the results that we get from our students can happen in really 5 minutes or less a month is because, look, when you want to become a good golfer, you're going to consume yourself with golfing videos, golfing content, golfing coaches. When you want to get more fit, you're going to consume yourself with fitness coaches, food, whatever it is, workouts, all that stuff. If you want to get good at trading, you're going to say, hey, who is the best trader in the world? Who's the best investor in the world? Let me go find where they are and learn from them. Now, the wealthiest traders and investors in the world are hedge fund or money managers. And where do they reside? CNBC, Bloomberg, the Wall Street Journal, Barron's. And the problem is, the way they operate, the way they invest, the way they trade is completely different from the way you and I have to as an individual or a retail non-professional trader. Think about it this way. They have tens or hundreds of billions of dollars under management. If they want to enter into a position, it will take them days to enter into a position. And if they want to exit out of a position, it will take them days to do so as well. The biggest disadvantage of having as much money as these large institutions, pension funds, mutual funds, hedge funds, index funds, is their sheer size completely prevents them from being able to be nimble. And as a non-professional, somebody who has less than billions of dollars, that is an enormous, enormous, enormous benefit to you and not to them. It's one of the reasons why I think it's a massive advantage to be a non-professional than it is to be a professional, because again, the more money you have, the harder it is to be nimble. And if you really kind of remove the ability to be nimble from your arsenal, it really takes away a lot of the really simple things that have a mathematical edge that really, really work that only you and I can do. So without further ado, let's go ahead and dive into the video. Boom, right here. Very simple. I call this the bookends trade, right? At the end of the day, you may have heard this in the ether as the turn of the month strategy. And the way this chart breaks down is this. From 1970 to October of 2021, the blue line, the one that turns $10,000 into $640,000, is buying the S&P 500 4 days before the end of the month and then closing it 3 days after the beginning of the next month. The gray line is all the other days. Now, this is one of the strategies that we use, right? There are a number of strategies that we use, but you can't sit there and tell me, hey, calendar, are there 4 days left in the month? If so, I buy the S&P. Hey, calendar, have we just completed the first 3 days of the next month? If so, sell. You cannot tell me that's going to take you more than 5 minutes a month, let alone a week. And as you can see, this is a very smooth up to the right from the bottom left of the graph to the upper right of the graph equity curve. So again, one of the reasons why my average student makes about $4,000 a week, and again, a lot of them are able to do it in less than 5 minutes, is because this is the world that we reside in. This blue ocean is not a world that a money manager who has billions of dollars under management would be able to live in. Why? Because it takes them way too long to get in, way too long to get out. You and I with, let's say, $25,000 or more up to about, I don't know, 10 billion, we can get in and out of this like butter all day and not even move the market. So again, one of the reasons why my students are able to get such good results in such a short amount of time with such little effort is because, again, this kind of stuff that you see on the screen is available, but it really realistically is only really available for those who have smaller accounts, those who can be nimble. Again, if you're a money manager, if you're Ray Dalio, you can't do this. Why can't you do this if you're Ray Dalio? Well, because number one, for most of the month, the money can't be invested. And because for Ray Dalio, his job is to get more assets under management so he can charge a larger management fee every year, he's going to go the majority of the month without being able to charge a management fee if he does something like this. Again, the business model of the large institutions, the pension funds, the money managers are more money under management so that our fees go up every single year. This is a great example of, look, this does not work for their business model. Not only are they way too large in terms of size, but this just straight up doesn't work for their business model. Because what this would mean is that for the majority of the month, the money is in cash, not invested. And if the money's in cash, you cannot start the clock on a management fee. So again, my name is Stephen Brooks. My clients are able to generate a very reliable second salary in really even less than 5 minutes a week for a lot of them. Plus, we use an AI trading bot, which really opens up a lot of avenues to make a lot of money and not spend really any time doing it except turning it on before the market opens up each Monday. If that is something that is interesting to you, go ahead. I've added a link to the description of this video. That link is going to send you over to our website. Go ahead and schedule a call to speak with somebody on my team. And on that call, if we think you're a good fit and we think we can get you great results, we will extend you an offer and an opportunity to join our program and work with us. If not, and then you found this video valuable, go ahead, like it, share it, subscribe to this video, click the bell so you can be notified every time I upload new content. But at the end of the day, remember, you as a non-professional, you as a retail trader, you have a massive, massive, massive advantage. Why? Because the business model of the larger money managers are the money always has to be invested. Because if the money is not invested, we cannot charge a management fee. And plus, since all we care about is getting more money under management, as time goes on, the less nimble we can be. And the less nimble you can be, the odds of you being able to do something like this are very, very small. And as a non-professional, it is a massive advantage to you. So again, this is a great example, this trade here. I call it the bookends trade because it kind of, closes out 1 month and then starts the next month. I kind of call it the bookends trade. If you want to search for it online, it is called the turn of the month strategy. But again, this is something that is taking you no more than 5 minutes for an entire month to do. It's very consistent, has a very smooth equity curve, and there's no reason that 100% of you who watch this video can't add this to your trading arsenal really, really quickly and have it be something that does not take a lot of your time to be able to do, but also is something that gets you quite consistent and quite consistent, and also at the same time quite reliable results, spending very, very little time to do so. So thank you for tuning in, and I'll see you on the next video.